All right, ready to dive into something a little different today.
Oh,
You sent in DCM Shriram Ltd's Q3 FY25 results,
okay.
and you want to go beyond the headlines,
Yeah.
which is perfect because that's what we do best.
I'm really intrigued by this one.
Right.
We've got hard numbers and your specific questions.
Exactly.
It's like a financial detective case.
Now, for those who don't know, DCM Shriram is kind of like a mini conglomerate in India.
Uh-huh.
They're involved in everything from the chemicals that go into your cleaning supplies to the sugar you might have in your pantry,
Yeah.
and even those Fenesto windows you've probably seen around.
They're a company most people interact with daily without even realizing it.
Yeah.
And they're coming off a strong year,
Oh, wow.
ending FY24 with $109.2 billion in revenue
Nice.
and a healthy profit margin.
Impressive. But there's a twist.
Here is a twist.
Right.
Yes.
The global economic outlook for 2025 isn't exactly sunshine and rainbows.
Yeah, you got it.
Right.
Modest global growth, geopolitical uncertainty,
Oh, yeah.
inflation, all those fun things that keep CEOs up at night.
Right.
And DCM Shriram's management actually acknowledges these challenges head-on in their report.
Oh, so they're not sugarcoating anything.
They're not at all.
That's a good sign, actually, right?
Absolutely.
Shows they're being realistic.
It's a sign of prudent management.
Yeah.
They know there are headwinds,
Okay.
and they're preparing for them.
Okay, let's unpack how those headwinds are affecting their different businesses. Starting with chemicals. Their caustic soda segment, standout performer.
Really is.
Demand is up, their new capacity is online, and they've even managed to bring down energy costs.
And that last part is huge in the chemical industry.
Yeah.
Energy is a major input cost. So
Yeah.
being able to reduce that gives them a competitive edge.
They're also doing something called downstream integration,
Yes,
which sounds pretty techno.
it is. But think of it like this. Imagine you're a bakery that makes cakes. Instead of just selling the cakes, you also start making your own frosting and sprinkles using some of the ingredients you already have.
Oh,
That's downstream integration.
I see.
You're taking your existing product and using it to create more valuable products.
So DCM is doing something similar with their chlorine byproduct,
Exactly.
turning it into things like hydrogen peroxide and aluminum chloride.
Exactly.
It's a smart strategy
It is.
because it reduces their reliance on volatile commodity markets
Yes.
and boosts their profit margins. Makes sense. But their PVC business isn't having such a great time, is it?
Not really.
No.
Global demand for PVC is sluggish, and China is flooding the Indian market with cheap PVC,
Oh.
which is driving down prices.
So even though DCM's PVC capacity utilization is up thanks to maintenance shutdowns last year, the low prices are hurting their bottom line.
Yeah, it highlights how interconnected the global economy is.
Wow.
What happens in China can directly impact a company in India.
Okay, on to something a little sweeter. Sugar and ethanol. This is where government policies really come into play.
Absolutely.
Globally, there's actually a sugar deficit.
Yeah.
But domestic prices in India aren't reflecting that. And the government is hesitant to allow more sugar exports
Right.
because they want to keep domestic prices stable.
Yeah. It's a balancing act for the government.
So it's a tough spot for DCM Shriram.
Yeah.
They could potentially sell their sugar for more on the global market, but they're limited by these export restrictions.
They have to weigh the interests of domestic consumers against the needs of the sugar industry.
Right. On the flip side, their ethanol business is booming, thanks in part to government support for blending ethanol with gasoline.
Right. India is pushing for renewable fuels, and that's creating a growing market for ethanol producers like DCM Shriram.
Yeah.
It's a great example of how a company can benefit from aligning its strategies with national objectives.
Now let's talk about something closer to home. Literally. Fenesta Building Systems. Those sleek windows you see everywhere are doing quite well.
They're a great example of a company focusing on what they do best while also looking for strategic growth opportunities.
Like their move into hardware manufacturing?
Yeah,
That seems like a big deal.
it is. It's what's called backward integration.
Okay.
Instead of buying hinges, handles, and locks from other suppliers, they're making their own.
So they're taking more control over their supply chain.
Exactly.
But wouldn't that be a costly endeavor?
There's definitely an upfront investment involved,
Yeah.
but in the long run, it could lead to significant cost savings
Yeah.
and give them a competitive advantage.
Oh,
It's like our bakery example.
okay.
If you control the ingredients, control the quality and the cost.
Smart move. Now on to Shriram Farm Solutions and their fertilizer segment. It's fascinating how DCM Shriram is playing in such a diverse market.
It really speaks to their diversification strategy.
Yeah.
Farm Solutions is all about innovation, with a focus on new, science-based products that help farmers adapt to a changing climate.
Like drought-resistant crops or ways to optimize fertilizer use.
Exactly.
That's really cool. What about the traditional fertilizer business?
They had a decent quarter, but gas prices are a major factor to watch, as they directly impact production costs.
And of course, government subsidies play a big role in the fertilizer industry as well.
Absolutely.
Yeah.
The fertilizer market is a prime example of how economics, politics, and business are all intertwined.
Okay, let's take a quick look at the overall financials before we dive into your specific questions.
Yeah.
DCM Shriram's Q3 FY25 revenue was up by 11% compared to the same quarter last year,
Wow.
reaching $28.98 billion.
Solid numbers.
And their profit jumped by an impressive 25% year over year,
Yeah.
reaching $3.67 billion. Definitely a strong quarter.
Yep.
But you mentioned earlier that we need to keep an eye on their debt levels.
Right.
While the profit growth is impressive, it's always important to look at the whole picture. Their debt-to-equity ratio currently stands at 0.13. Wait, what's a debt-to-equity ratio again?
Think of it as a measure of how much debt a company is using to finance its assets relative to the value of its shareholders' equity.
Oh.
A ratio of 1 or less is generally considered to be healthy, and anything above 2 might raise some eyebrows.
So 0.13 means DCM Shriram has a very low level of debt.
Very low level.
Got it. Now, what about that juicy dividend announcement you mentioned earlier?
Ah, yes.
Yeah.
They announced an interim dividend of 180%, which translates to 3.60 per share.
Nice.
That's on top of an earlier dividend, bringing the total to 280% for the year so far.
Wow, that's a pretty generous payout to investors.
It is.
What's the signal they're sending with such a high dividend?
It suggests they're confident in their ability to generate strong profits in the future.
Right.
Companies are usually hesitant to distribute such a large portion of their profits unless they believe they can sustain or even grow those earnings.
So it's a vote of confidence in their own future.
Exactly.
That's reassuring.
But of course, there are still those global economic headwinds we talked about earlier.
Right.
Yeah.
Which leads us perfectly into your first question.
All right, let's hear it.
You had some great questions about those chlorine downstream projects mentioned in the management's message.
Right.
What are they and why are they so important for the chemicals segment?
DCM Shriram has been talking about these projects for a while,
Mm-hmm.
and they're starting to come online.
Okay.
We're talking about things like epichlorohydrin, ECH,
Okay.
and additional hydrogen peroxide capacity.
Got it.
These are high-value products that utilize chlorine, a byproduct of caustic soda production.
So it's like turning a potential waste product into a profit center?
Yeah.
Sort of like turning lemons into lemonade, but with chemical?
Exactly. It's a classic example of vertical integration
Yeah.
by utilizing their existing chlorine output to create higher-margin products.
Okay.
They're not only boosting their profitability, but also reducing their reliance on volatile commodity markets.
Makes sense.
It's a win-win.
But it sounds like the ECH project in particular has faced some delays.
Right.
That's not uncommon in large-scale industrial projects.
It's not.
But what does it mean for their immediate future?
Well, the delays are unfortunate, but they don't fundamentally change the long-term value proposition of these downstream projects.
Mm-hmm.
They're still expected to be major contributors to the chemicals segment's growth and profitability in the coming years.
Okay, next question. What's the deal with sugar export policies?
Yeah.
It sounds like the industry is pushing for more exports, but the government hasn't budged.
This is a classic case of government intervention in the market.
Oh, okay.
India aims to ensure domestic sugar availability at stable prices,
Right.
which often leads to restrictions on exports.
Okay.
But when global prices are high
Mm-hmm.
and domestic prices are low, as they are now,
Right.
the industry feels the pinch.
So it's a balancing act between satisfying domestic consumers and allowing the industry to capitalize on profitable export opportunities. But wouldn't allowing more exports also bring in more foreign currency for India?
You're right. That's another factor the government has to consider.
Oh.
It's a complex equation with many variables.
Wow.
And the outcome of this balancing act can have a significant impact on DCM Shriram's sugar business.
Yeah.
It's definitely a development you should continue to track closely.
All right, moving on to Fenesta. Their move into hardware manufacturing sounds like a big deal.
It is.
But how long will it take for those cost savings to kick in?
Backward integration always involves an upfront investment,
Right.
and it takes time to realize the full benefits.
Okay.
Setting up a new manufacturing facility,
Mm-hmm.
optimizing production processes,
Yes.
and integrating it into your existing supply chain,
Right.
these things don't happen overnight.
So we shouldn't expect to see a sudden jump in Finesta's margins next quarter just because they're making their own hinges and handles now.
That's right.
Okay.
It's a long-term strategic play,
Yeah.
and it's important to evaluate it in that context. Think of it as building a foundation for sustainable long-term growth.
Got it. Now, on to a question that's close to my heart. Sustainable agriculture.
Oh, yeah.
It sounds like DCM Shriram is making a real push in this area with their Farm Solutions segment.
They are?
What are they doing specifically, and how does it tie into the bigger picture?
This is a trend that's gaining momentum globally,
Mm-hmm.
and DCM Shriram is wisely positioning itself to benefit.
Yeah,
They're developing products that address specific challenges faced by farmers in a changing climate.
right.
Think about drought-resistant crops, pest-resistant varieties, and even solutions that optimize fertilizer usage.
So it's not just about selling more products, it's about providing farmers with the tools they need to adapt and thrive in a more sustainable way.
Precisely.
Cool.
And this resonates with consumers who are increasingly demanding food that's produced responsibly and sustainably.
Oh, wow, yeah.
DCM Shriram is aligning its business with these evolving consumer preferences, which is a smart move.
Next up, we have a question about their debt levels. You mentioned the debt-to-equity ratio earlier.
Right.
What's considered a healthy ratio, and where does DCM Shriram stand?
That's a great question, and there's no one-size-fits-all answer.
Okay.
A healthy debt-to-equity ratio varies depending on the industry,
Right.
the company's growth stage, and its overall financial health.
I see.
In general, a ratio of 1 or less is considered low, while a ratio above 2 might be considered high.
So context is key.
Context is key.
We need to consider their specific circumstances.
Absolutely.
Right. Okay.
Now, DCM Shriram's debt-to-equity ratio for Q3 FY25 was 0.13, which indicates a very low level of debt.
Oh, wow.
They ended FY24 with a similar ratio of 0.23.
Okay.
This suggests they're managing their debt prudently and have ample financial flexibility to pursue growth opportunities or weather any storms.
That does sound good. But how does this low debt compare to their competitors?
Yeah,
Are they an outlier, or is this typical for the industry?
that's a sharp question. It would require a deeper dive into their competitors' financials, which we don't have in front of us right now,
Right.
but it's definitely something worth investigating.
Okay, good point. Now, a few listeners were curious about the dividend announcement.
Mhm.
What should they read into such a generous payout?
As we discussed earlier, it's a strong signal of confidence in their future earnings potential.
Right.
Companies don't distribute profits to shareholders unless they believe they can sustain or even grow those profits in the coming years.
So it's not just about rewarding existing investors, it's also about attracting new ones and building trust in the market.
Exactly.
Yeah.
And this is particularly significant in the current economic climate where uncertainty is high.
Mm.
This dividend announcement sends a message that DCM Shriram believes it's well-positioned to navigate the challenges ahead and deliver value to its shareholders.
But isn't a high dividend payout risky if the global economy does slow down?
Uh-huh.
What if they need that cash to weather a potential storm?
That's a valid concern. High dividend payouts can sometimes limit a company's flexibility to invest in growth or handle unexpected challenges.
Right.
However, DCM Shriram's low debt levels provide them with a cushion.
So their conservative debt management is giving them the confidence to return cash to shareholders.
Exactly.
Interesting. Now, this next question is a bit more speculative.
Okay.
How might a global economic slowdown impact DCM Shriram's various business segments? It's hard to predict the future, but what are some potential scenarios?
That's a great question. And it requires us to think critically about the interconnectedness of global and domestic markets.
Okay.
Let's start with chemicals.
Okay.
A global slowdown could dampen demand for industrial products like caustic soda, putting pressure on prices and profitability. However, DCM Shrimp's downstream integration into higher value products might help them weather this storm better than some of their competitors.
So those strategic investments we discussed earlier could prove to be their saving grace?
Exactly.
Wow.
Now, for sugar and ethanol, the impact is a bit more nuanced.
The global slowdown could lead to lower demand for sugar, potentially depressing global prices. However, India's domestic sugar market is heavily regulated, so the impact on DCM Shriram might be muted depending on government policies.
So once again, those government policies play a crucial role in shaping their destiny.
They do.
What about Finesta Building Systems?
Yeah.
How might a slowdown impact their business?
Construction and infrastructure projects are often sensitive to economic cycles.
Right.
A slowdown could lead to delays or cancellations of projects, which would directly impact Finesta's order book and revenue growth.
I see.
However, their focus on both retail and project segments might provide some buffer, as retail demand for home renovations might be less affected by a broader economic downturn.
So diversification could be their key to resilience in this segment.
It could be.
What about farm solutions and fertilizer?
Yeah.
How might they fare in a slowdown scenario?
Agriculture is often considered a relatively resilient sector, even during economic downturns.
People need to eat no matter what's happening in the stock market.
True.
However, farmers' incomes could be squeezed if commodity prices fall,
Yeah.
which might affect their willingness to invest in new products and technologies.
So DCM Shriram might need to adjust their pricing strategies or focus on products that offer the most value for money to farmers in a tougher economic climate.
That's a great point.
Yeah.
It's all about adapting and finding ways to add value even when the macroeconomic environment is challenging.
Right.
DCM Shriram's strong financial position, particularly their low debt, gives them more flexibility to adapt to changing market conditions. For example, they could use their cash reserves to acquire a struggling competitor or invest in research and development to create even more innovative products.
That makes sense.
Yeah.
Their low debt isn't just about looking good on paper.
It's not.
It's about having options and staying agile in uncertain times.
Exactly.
Right.
It's like having a safety net that allows you to take calculated risks and seize opportunities when others might be pulling back.
Okay, deep divers. That was a whirlwind tour through some of the most pressing questions surrounding DCM Shriram's performance.
Absolutely.
We've covered a lot of ground, but as always, there's more to explore. We've explored DCM Shriram's Q3 FY25 performance, analyzed their key segments, and tackled some tough questions as we wrap up this deep dive.
Yeah.
There's one thing that really stood out to me about DCM Shriram.
Oh, yeah. I'm curious.
It's their focus on innovation
Yeah.
and strategic investments.
Right.
From those downstream integration projects in chemicals to Finesta's move into hardware manufacturing.
Yeah.
And even those new farm solutions products. They're
Right.
not just reacting to the market.
Yeah,
It seems like they're actively shaping their future.
You're absolutely right.
Yeah.
And that proactive approach is often what separates companies that thrive in challenging environments
Yeah.
from those that simply get swept away by the tide.
It's like they're building their own boat
Exactly.
instead of just hoping to catch a ride on someone else's.
But the big question is,
Yeah.
will these investments be enough to offset the challenges of a slowing global economy?
Right.
That's the million-dollar question we're left with.
It is. And it's a question you can continue to explore as you follow DCM Shriram's story.
Yeah.
Will their bet on innovation pay off? Will their conservative financial management give them the flexibility they need to navigate uncertainty? We've given you the tools and insights to draw your own conclusions.
Remember, financial results are a story that unfolds over time.
Yeah.
This deep dive has equipped you with the knowledge to understand that story as it evolves.
Right.
Stay curious.
Mm-hmm.